Hi guys, and welcome to Trading and Investing with Carl. In today's video, I'm going to give you my daily update and outlook. That's the last video of the market before the weekend. So first of all, we are going to start with the yield curve control as the rates still rise. The problem with rising rates is the more they rise, the more expensive the debts get. That means the central banks have to take action, and that can be done with YCC, so yield curve control. That means the Fed, ECB, or any other of the central banks set a max target for the bonds and hold the rates down by buying as much as they need to keep the rate down to that target. Theoretically, it sounds good, but it's not lowering the expected inflation by the market and sends a bad sign to it, because that would mean the bond market has nothing to do with economical reality. Also, it would just push the expected inflation even higher, because it's the same as QE, so quantitative easing, and pushes more liquidity into the market. Also, if they then give up on the yield curve control, they would make massive losses with the bonds they bought if then the rates rise further. Here we see a chart from the input of the M3, so the input of liquidity in the Eurozone, and the CPI, so the consumer price index in the Eurozone. You can see the spike in January because of the CO2 taxes and the rise of the VAT. What is going to happen next with the CPI in March and April? Because then we have the comparable dates from the last year, and it's going to be interesting to see how much the inflation is in this period. Here we have an article that says Goldman Sachs boosts US GDP forecast to 6.8. But the question is this growth sustainable? Here you can see a chart, how much the debt compared to the GDP is. And you can see we are at nearly the same levels as at the World War II. And the projection is even worse. We are going to be in the far future at around 200% if this input of money is going on like this. Here you can also see a massive divergency, and growth only comes from liquidity put into market. You need $5 to $7 to produce $1 of real growth. Also, our next question is, you can see here a chart. Every time the debt is going up, the taxes were going up. We live in an age, or in ages, where taxes were at a stable stage. The question is, are they going to stay like this? I don't think so. Also, you can see here the problems that occur by the rising rates in the bond market. You can see it's getting more expensive to get a loan and refinance your mortgages. That is a problem for people who are over leveraged and have a bad cash flow. Next on, we are going to look at some charts. So first of all, we are going to look at the Bitcoin chart. We broke to the downside out of this pattern. We also got a bounce back at this strong support and buy area. If this is not going to hold, then we're going to see another massive correction, in my opinion. Here we can see the Nasdaq. You can see we wigged through the support area we talked about yesterday, but we got a strong bounce back here, so that is a good sign for the Nasdaq. It's going to be interesting if it can jump back into the channel or if it gets another turn to the downside. Here you can see the S&P 500 we also talked about yesterday. You can see we are fairly back into the channel. We need to stay in that channel from a technical perspective, so we can call it still an uptrend. If we break down bearish, we got here another support line, but we are in dangerous territory if it breaks further down. Here we see the Dow Jones. The Dow Jones got maybe the hardest hit beside of the Nasdaq. You can see we bounce back into that range. We still got the support here, but the trend upwards out of this channel is not confirmed. We didn't get the confirmation at this line, so we are back in this channel, and maybe we are going to jump further back and forth. If we break to the downside, the next target is this area here. This should wrap it up for today. Today it was a short video. I hope you still enjoyed it. Maybe smash up the like button. I would love if you subscribe to my channel. And with that all said, good luck with your trading, good luck with your investing. Please don't get wrecked, people.